Hey team, welcome back to another video lesson. We are jumping into video 9 out of our 10 video series. What I thought would be best is to lean into the pros and cons between individual brokerage accounts and the two prop firms that combined I've used for the last 4 years and I've had great success from them. The whole point of this video series is not to tell you guys what to do. It's just to expose you guys to what's worked well for me, and then you guys can make your decisions on what makes sense in your starting point of your trading or investing journey. So what I'm going to do is I'm going to go down the list of the bullet points. I wanted to keep it just to a few so I can go through these and give some explanations and expand on them a little bit, and then I'll jump into the next section of the video. So looking at this, we are looking at individual brokerage accounts, pros and cons. So starting off with the first bullet point on the pros, you can see full profit retention. It's really comparing the individual brokerage account to the prop firms. So when you see full profit retention, you're probably going to ask yourself, why wouldn't it be a full profit retention? What else is there? And I'll explain that a little bit later in this video. But when you're funding an individual brokerage account, let's use an example of $1,000. That $1,000 is going to sit in cash until you make a decision of where you want to invest or trade into. So let's say that there's a stock out there and you've read up on it, you're trading based off of fundamentals, so maybe the news or the outlook or growth opportunities of the company, and you invest $500 of your $1,000 into this company. And say this company's value goes up and that $500 turns into $600, and you choose to sell all of those shares at that point and you make $100 profit. So in that example, when you sell your shares, there is a certain amount of days that it takes to settle. So once you sell, it's considered unsettled funds, and then once those funds become yours and are settled, then you can access those again. So pretty straightforward. You made that $100 profit, you sold the shares, it takes a day for that to settle, and then it's back into your account. You at this point keep 100% of those returns, so that's full profit retention, minus the taxes that are owed end of year. So depending on how much you make or lose, that factors into capital gains taxes, and we're going to expand on that on the con side. With the prop firm, if you make a certain amount, depending on the firm, there's eventually a profit split that comes into play. Again, we'll cover this more later in the video. So the reason why this is a con is because capital gains tax is typically much higher than normal income. There's a difference between short-term and long-term capital gains tax, and that's going to factor into how long you're holding the position and what type of trading avenue that you're trading in. So for example, futures trading is going to have a different tax compared to options day trading. Why is this a con? Of course, if you make money in any aspect of life, you pay taxes. That's just how it works. With prop firms, it's normal income or 1099 contractor tax compared to capital gains tax. So again, this is just for an overview. You guys can take the time to dig into this and look a little bit more in depth, but I wanted to lay those out there for you. Going into pros, no trading restrictions. Again, this is comparing the pros and cons with prop firms and individual brokerage accounts. I want to go a little bit in depth on that. This is kind of a gray area. So there are some trading restrictions. What I mean by this is if you place a trade, you can choose between all different types of tickers, different type of sectors of the market. And if you make money or lose money, you can choose to sell that at any point, and then you go on to the next trade. Depending on which firm you use, there are some restrictions on the time of day that you're trading. The futures market does close for an hour, and with most firms that I've come across, you can't hold your position into the next trading session. Before that 1 hour break happens, you would have to have all your positions closed and be holding no active positions. Now jumping over to the cash and margin account risk, this just goes hand in hand with the type of trading style that you're looking to get involved with. Again, if you're trading futures on an individual brokerage account, you would need a margin account. If you're just planning on buying and selling stock share or options, you could get away with a cash account if you're not looking for any leverage with a margin account. But the reason why I have this on the cons is because with a margin or a cash account, there's tons of risk when you're placing trades, especially if you're doing day trading or some higher risk type of trading style. With a cash account, you know exactly what you can lose. It's the amount of cash that's in your account. So using that same scenario from before, if you fund your account for $1,000 and you buy one company, all $1,000 worth of shares, it's a high risk penny stock, and it gets delisted and goes to practically zero, you could potentially lose that full $1,000. When you're on a margin account, there's even added risk to that. You definitely want to do tons of research before you jump into a margin account. You can definitely get away with a cash account for majority of your trading needs. Now going into swing trading capability, that's going one step further, again, compared to a prop firm. firm when you have to close out of all your positions end of day. With an individual brokerage account, that's your money. You can buy and hold stock share for as long as you want. You can swing trade options contracts and hold those for a couple weeks at a time. You have the flexibility to choose how long you're in trades. Going to the cons, forced consistency is one of the biggest areas I like to focus on. This is one of the most crucial reasons why I'm still self-employed and full-time in this industry. Let me give you two examples. Say I'm trading on an individual brokerage account that I funded $20,000 of my own capital. Say I have a great year and I 3 times that initial investment of $20,000 and turn it into $60,000 of profit. So now my account value is at $80,000. Of course, end of year, I'll pay taxes on that $60,000 profit. Let's say the following year, I lose $40,000. So I had $80,000 now and I lost 50% of it. I'm back down to $40,000. Yes, I'm still up $20,000 from my initial investment, but it's no longer a livable wage because in 2 years, I'm only up $20,000. I'm no longer up $60,000 in 1 year, which becomes a little bit more lucrative. With a prop firm, there's a whole nother layer that I'm going to add to that. So forced consistency shows me that over the long run, unless you have a very consistent strategy or trading style, it is difficult for traders to remain consistently profitable over the course of multiple years. Is it doable? Absolutely. Is it difficult? Absolutely. So now what I wanted to jump into is prop firms. Guys, there's a reason why I'm introducing this to everybody. I wanted to go through it first and try things out before I would ever recommend or refer people to anything. Again, I've been trading with prop firms for over 4 years now, and I have a lot of data and findings from my personal experience. To be very transparent, I could make an hour video just going in depth on pros and cons from prop firms and telling you guys how it's bettered my life compared to just trading in an individual brokerage account. So as you can see here, I laid it out pros and cons the exact same way as the previous slide. The reduced personal risk on the pro side is where I want to start. So to make this make sense, I want to explain a prop firm in a very, very entry level, easy explanation. And again, you guys can watch other YouTube videos just on a specific prop firm or the overall structure, or type in on ChatGPT, whatever the case might be. You guys can do a lot of research on this, but I want to give you a very, very quick overview. So when I say reduce personal risk, what I mean by that is if you're trading, like we said before, in an individual brokerage account, not only do you need more capital to start, but it's also a higher risk of losing that amount of capital. So if I had $1,000 in my own individual brokerage account and say I got into day trading and I thought I had it all together, I didn't do enough back testing and practicing, and I ended up losing $500 of that $1,000, I lost 50% of my initial investment. You can see how that could emotionally factor into my trading and overall just thought process of the stock market. With a prop firm, you essentially, when you're ready, can pay a subscription, much like a phone bill price. It could be $30, $50, $100, depending on what prop firm you're using and if they have promotions running, but you essentially can pay a subscription until you pass that evaluation and then choose to pay a lifetime fee. So let me lay this out. Say I have my system all together, I am very confident in my trading style, and I want to make the most amount of money as possible without risking my 9-to-5 income. I can pay $30 a month, say $50 a month, and pass that evaluation. Even if it takes me 2 months, I paid $100. And then once I pass, I can choose to pay a lifetime fee. And depending what firm, it's always going to be different, but say $150. In this example, my total skin in the game is $250. Once you pay that lifetime fee, it is exactly how it sounds. It's a lifetime fee as long as you have that account. There is no more overhead pressure, no more monthly expense, no more monthly cost, anything like that. And you can trade with this prop firm and aim for a consistent dollar amount per day, per week, whatever it is, and get to the withdrawal. And as long as you have that account, there is no more expense for you, meaning you can turn that $250 and grow that into, say, $5,000 of profit and choose to eventually withdraw all of that $5,000. You only use $250 to grow that to $5,000 pretty much stress-free at that point. And again, this is very, very entry level. There's a lot more that goes into it. I don't want to make it sound like it's candy and roses, so I want to go directly into the cons. Challenge to qualify. So if you're using your own capital in an individual brokerage account, of course, it's challenging to trade. Day trading, swing trading, long-term investing, none of it really is easy per se, but it is straightforward. If you make a certain dollar amount and choose to sell, That's it. There's no other rules to it. You choose to sell it, you sell it, and you just factor into what you'll owe at tax end of year. With the prop firm, you're essentially paying a subscription for fake money to start, and it can be challenging to pass if you don't have a system or understanding of how to pass these prop firms. So that would be an instant con for somebody coming into it blindly. Now going back into the pro side where it says access to capital, this is another example of questions that I've received over the years. People often will ask how much money is needed to start trading, and that's a very open-ended question because if you're doing it to potentially make a livelihood change, that's a much different capital requirement on an individual brokerage account compared to someone that's just trying to have fun and make a few dollars here or there. So I always say, if you're trying to do this at some level of full-time capacity or part-time income capacity, I typically told people 5 to 10,000 is a starting point. And again, you don't need to start with that. You can paper trade or sim trade way before ever putting real capital into an account. But typically I said at least 5,000, realistically 10,000 on an individual brokerage account. When it comes to a prop firm now, I can start those same people off that were going to invest 5,000, 10,000, 20,000, whatever the case might be. They can start off whatever the active prop firm account evaluation fee is rather than risking thousands of dollars. You'll learn very quickly if you blow account after account that you can always cancel your account subscription and then get back to the drawing board, and then when comfortable, open up another account. The dollar amount pressure is not there with prop firms. It's much lower risk and there's much greater reward. So jumping over to the cons now, which directly correlates with what we just talked about, is the fee structure. So this is going to be dependent on what account size you're choosing, a 25,000, 50,000, 100,000, etc., etc. The bigger the account, unless there's an active promotion, it's always going to be more expensive based on more capital that's given, which makes perfect sense. But with an individual brokerage account, there is no fee structure because it's your capital that you're funding. Again, I'm just laying the foundation here. It's going to make more and more sense as we dig further. Going back to the pro side of leverage, think of it this way. With a prop firm, I can pay a subscription fee, pass that account, pay a lifetime fee, do it again, do it again, do it again. Adding one more layer to this, and I'll actually cover it more in the last slide, but you can have more than one funded account. So in the example that I gave of passing the evaluation, paying the subscription, passing the evaluation, getting funded, paying the lifetime fee, with Top Step, you can have 5 accounts. With Apex Trader Funding, you can have 20 accounts. The leverage potential and the larger upside potential, I want to combine those two. If I was trading with say 5 funded accounts and I aim for $50 per day across 5 of them, that turns into $250 per day with very low risk. If I was trading my own individual brokerage account, there's no opportunity to trade multiple accounts with the downside capped risk. Meaning if I'm aiming for $250 per day and I have $1,000 in my account, that's a 25% return. And on the downside of it, I would have to have a risk management strategy where I would only lose say $125. If I'm trading on an individual brokerage account, I could go work a 9 to 5 and say make $300 and potentially give back $125 on a bad trading day. With a prop firm, I pay the subscription, I paid the lifetime fee. There is no more expenses that come out of my account. So I could aim for that $250 profit day with a very low risk. And if I lose say $125, it's not actually my $125 at stake. I already paid that in my subscription and funded account fees. So do you see how this becomes very lucrative? If I go back to a very simple explanation, I start off with one evaluation, I pass that, I become funded, and I grow that to $10,000 of profit. I can work my 9 to 5 and sleep well at night knowing that I will not lose any money back even if I have a bad trading day because I already paid the subscription and lifetime cost. But I do have the opportunity to have a huge trading day with literally no risk at that point. It becomes very, very, very appealing and lucrative once you get this down. That's why the larger upside potential is listed on here as well. Think of it this way. For me to make $1,000 a day trading my own money, I have to either one, have a large amount of capital in that account to make a realistic percentage return to hit that $1,000, or I have to make a huge percentage return. But if I'm trading on a prop firm and I have 20 funded accounts and I hit $50 per day across those 20 accounts, if I use a trade copier without getting too complex, there's ways to get to that $50 for the most part stress-free as far as trade copying, with very limited downside risk. This can get overwhelming, but I want to lay out why this is so lucrative. lucrative. I'll just merge the last two together, so withdrawal periods and increased risk of over leveraging. The prop firm industry is an ever-changing market, so at one point you could only withdraw twice a month from Apex Trader Funding. There was different withdrawal periods and structures for Top Step. Now it's pretty straightforward, so I'll go into the next slide and go in depth between the two. With an individual brokerage account, there's no withdrawal periods. If you make money and you choose to sell, that's your money. With prop firms, since you're using their capital, they have their rules in place that you'd have to look into. Increased risk of over leveraging. I see it time and time again that traders will blow their evaluations or funded accounts because they can trade with much greater leverage and expose themselves to a few bad trades and blow that account. You just wouldn't do that if it was your personal brokerage account. That's your money that you're losing. All right, and this brings us to our last slide. As you guys can see, I have Top Step and Apex Trader Funding as the prop firms listed. I wanted to list some of the strengths between the two. So with Top Step, it's always 2 days to pass. With Apex, they often do a 1 day to pass promo. With Top Step, you can have up to 5 funded accounts. With Apex, up to 20 funded accounts. To get a withdrawal, it's pretty straightforward here. With Top Step, it's 5 days with $200 or more, and you can withdraw up to 50% of your totals. With that example of $200 exactly of 5 days, that's $1,000. You can then withdraw $500 of profit. With Apex, there's payouts every 8 days. You just need to have 5 of those days of $50 or more. And you can see much more in their FAQs on either site to see a little bit more in depth on the thresholds needed. For example, with Apex, they typically want you to have a certain threshold in the account before withdrawing all of the capital. And then you can see 100% of your first $10,000 made with Top Step before there's a split. And with Apex, 100% of the first $25K before it's a 90-10 split, meaning you keep 90% of the withdrawal amount and they keep 10% after you hit that threshold. And that is per account. So I wanted to just lay this all out there as we navigated through these 3 slides, and I gave some pros and cons between individual brokerage accounts and prop firms. Now I'm laying out the differences between the 2 prop firms that I primarily trade. So in conclusion, after we went through these 3 slides of going through the pros and cons of individual brokerage accounts and prop firms, I wanted to just give you guys a full summary on this and why I use prop firms. It does not mean that you only have to use prop firms. You can use them side by side, meaning one prop firm if you wanted to, multiple prop firms, or multiple prop firms and an individual brokerage account based on what your needs, goals, and trading plans are. So leading into a few differences, remember the taxes. With a prop firm, you're taxed on normal income. So say I grow my account to $5,000 and I withdraw $3,000 of it, I'm taxed end of year normal income as a 1099 contractor compared to an individual brokerage account where it's either capital gains or losses that factor into it. And within those capital gains, it's going to be either short-term or long-term. Leading into the next, and one of the biggest reasons why I trade with prop firms is the consistency of a trader. Say I have a great trading year and I make $50,000 in an individual brokerage account and $50,000 in a prop firm, and I withdraw $50,000 from the prop firm and secure and sell my $50,000 worth of profit in my individual brokerage account. That's great for both of those. Again, the taxes are going to be a little bit different. Say the following year, I lose $30,000 in my individual brokerage account, and at the same time, I blow 20 accounts with the prop firm. It is going to be a much smaller dollar amount loss with the prop firm. I've heard it time and time again that traders have had great trading years and given a huge percentage back the next year or maybe 2 years later. So that consistency variable is always there. With the prop firm, if I would withdraw $50,000 in profit, it would take me tons of losses of blowing funded accounts, blowing evaluations to give back that profit. So just putting that in perspective, the consistency variable is way more on your side with the prop firm once you get to the threshold of getting withdrawals. But lastly, in full conclusion of this, guys, you have to make the best decision for your trading and investing goals. I don't want to make this video to persuade you either direction, but if a prop firm ever makes more sense to you guys, you can always use my coupon code OPT92A. As this video is made with Apex, that is always going to give you the best percentage off. So say they're running an 80% off sale and you don't even know if they're running a sale or not. If you use that coupon code, it's going to automatically apply that without you knowing what sale or promotion is currently running. It's peace of mind that if you are going to get involved with the prop firm, you at least know you're getting the best price. Top Step, I'm actually working on an affiliate code with them right now, but if I do end up getting one with them or any others, it's always going to be that OPT92A. I hope this broke down some barriers for you guys, and at least it opened the door to new opportunities in your trading or investing journey. I hope you guys have a great day. I'm excited to drop the next video where I'm going to be jumping into live trades where you can see real-time point of view of me placing trades and doing this for my full-time income. Until next time, have a great day and talk soon.